Welcome to my channel, everyone. Thanks for tuning into this video where I'm going to go over my favorite and best trading indicator that I use. And for those that have been following me for a while, you all know that I do not like using indicators. I trade solely off of price imbalances and volume. So this indicator has to do with volume, and those are really the only indicators that I will ever use. I don't use any lagging indicators. Now, I know a lot of people use moving averages, different oscillators and stuff like that, which is fine. You could develop a strategy around that. But personally, anything that lags price, meaning the data is collected after it's closed, is going to skew your risk to reward. And that is the worst thing you could ever do to your trading strategy, is skew your risk to reward. So solely off of price and volume is what I trade off of, and that's what this indicator is based off of. It works very well with my trading strategy, and I love it, and I can't wait to show you all in the next couple of minutes. Before I do begin this video, all I could ask is if you learn anything from it, you enjoy it, if you were to drop a like and also follow me on Instagram. I will link this in the description below. It's definitely worth a follow. I post daily trading recaps, and I post very good trading tips and tricks. Link for this will be in the description below. And without further ado, let's get right into the indicator. So a lot of new traders, want to focus on what indicators they have on their screen. They think it moves price, but in reality, indicators will just help paint a story, whereas solely price action and volume will actually move price itself. If you haven't seen my last video I just posted, understanding the auction process of the market, I would definitely recommend going to watch that, and you could understand this a little bit better. But basically, the only way price can move is from people buying and from people selling. Every other indicator, every other moving average, MACD, just will help you paint the story where you could form a trading strategy around it. That is not something that will actually physically move price up or down. The only thing that could do that is buy and sell orders, which we're visibly going to be able to see from the time and sales. Now, everything that comes through here on the time and sales right here is a completed transaction on the market. For every ticket, there's a buyer, and for every ticket, there's a seller. That is the only way price can move. And on ThinkorSwim, other platforms, this may be different, but on ThinkorSwim specifically, the colors on the time and sales do not indicate anything important for us. The colors will only represent if the last ticket was higher, then it is going to be a green ticket coming through. If the last price that came through on the time and sales is lower, then we're going to have a red ticket. So, for example, in this case, if $110.15 comes through, if the next ticket is $110.10, obviously we're going to have a red ticket. And if the next ticket is higher, it's going to be green. Green does not mean buy, and red does not mean sell. That is very important. The colors do not mean buying and selling. Now, this is very good because this indicator will basically put the time and sales, but on a volume basis. So the volume down here is very crucial because every ticket that comes through is going to populate the volume higher and higher, and stronger volume with increased moves to the upside is going to indicate a new buying in the market, and the trend can sustain. Whereas low volume rallying into a zone with not increased participation from market participants can certainly mean that the market is going to fade. So this indicator right here, I'm gonna go to studies, and if anybody wants this indicator, drop your email in the description below. Write your email out, and I will send you all this indicator. Just bear with me. I'm probably gonna get a lot of comments for it, and I'll send them every night through. This is a custom indicator. I'm gonna apply this to my charts, add this to volume. Okay. So now we have the standard volume here, and now we have the buying and selling volume. So what this is going to show is basically every red ticket that comes through on the time and sales is going to come through on the red side, and every green ticket is going to come through on the green side on the volume. In fact, let me get rid of the normal volume bars because that's irrelevant right now with this indicator. Equities, show volume subgraph, and now it's removed. Okay, so this is the standard volume bar, but now they're just colored differently because they're going to indicate upticks, and they're going to indicate downticks. So how I use this, if you learned from my past video, whereas if price is coming up and you see strong buying coming inside of a 45 or any supply zone in this case, and price cannot move higher, that is absorption, and basically these buyers here are providing liquidity for the sell orders inside of the supply zone. So let me just make that a little simpler. So Down here, this is a 5-minute chart, keep in mind. I'm going to get rid of the time and sales. Let me just make this a little bit bigger. Okay. So the first 1, 2, 3, 4 candles in this case, let's just say, the first 3 of them are a very strong green buying pressure. So like I said from before, the time and sales, green really doesn't mean buy, green means uptick. But a high percentage of the time, I don't know an exact number, but a high percentage of the time, green upticks are going to be buy orders and red downticks are going to be sell orders if the last ticket came below the previous price, maybe like 80% of the time. So if you see green buying coming through in the market on the first candle, second candle, third candle, and right here we have a 45-minute supply zone and you have traders buying this, look where my cursor's at. Look at this candle right here. Let's see how many, so you have I don't know the percentage of it, but you have a huge green volume bar coming through. You have a lot of traders buying the ask, market ordering in right inside of a supply zone, and now we're absorbing price. You have all these buyers that caused this rally to the upside. We're inside of a supply zone where we have a huge sell order imbalance, and price cannot move any higher. That could be the sellers at the supply zone absorbing the orders, and look what happens. We sell off pretty hard from the supply zone. You have a lot of trap longs now buying inside of a supply where there is a large seller sitting at, basically absorbing all the retail trader long positions. And then the next candle, we have a decent sell bar where the red represents more than 3/4 of the bar. And then price continues to move down and move down. So just looking off volume alone, what I tell from this would have been a good entry to get short is when we came above, hit the supply zone off of strong green volume. We immediately stall out, buying then dries out, sellers hit the market, take it over, and now you have a lot of trapped longs down here, and trapped longs usually will turn into sellers because you have to think about it. If they stop out of the market, they have to sell to stop out, and hitting the market on the sell side is going to cause an even further reaction to the downside. So that's how you could read volume for, in this case, a supply zone using these buying and selling volume bar indicators. Now I'm going to show you another couple examples, which is going to help you get the point a little bit better. So now we have NVIDIA here, which we have a 3-hour supply zone and a 1-hour supply zone, which is inside of the bigger zone, which is the 3-hour. Now, the first time price rallies, if I zoom this in a little bit, I don't want to show you what happens later on. So the first time we touch the 3-hour supply zone, I want you just to dissect the volume a little bit. So, this run up is cool. That's fine. The second bar, I don't know if this was an error, but did not have any selling. Third bar, a little selling. Fourth bar, that's fine. You can move up on selling volume and you can move up on buying volume. If you have removing liquidity from the market, if you have sellers removing liquidity, we can move up on lower green volume. If you have buyers adding liquidity to the market, then we can move up on more sell volume. So there's just different ways the market can move. But in this case, the first time we touch supply zone, this was a good entry to get short. This volume bar right where my cursor's at, I want to mention. So we had a decent amount of selling compared to the buying. So we had over half of this 5-minute candle was more of down ticks on the time and sales. Like I said, red does not necessarily mean selling. It just means that the market down ticked. But if the market did in fact down tick, a high percentage of the time it is actually a sell order. And it's important to use the colors in context. If you were to look at the time and sales the minute we came into the supply zone and saw a bunch of green, but didn't note all the red that came through, then it's really irrelevant information to you. But now that we could see it visually on a subgraph volume bar, that is what's important about this indicator. Again, this bar had more than 3/4 of the bar was sell pressure, yet the market cannot move down. If you have traders hitting the market and lowering price, but price is still stalling, not moving down and not moving up, you might have a buyer absorbing all these orders for another leg higher. So this technically from a price action standpoint was a valid short. If your stop was high a day, you obviously would have got stopped out. But if your stop was above the zone, you obviously would have been still in the trade. So there was nothing really too convincing with volume here. Now, this is just another indicator, another confirmation that I personally use on my strategy. But if you go to the next couple of candles, one thing I want to mention here is we broke high a day, and look at the volume. You had buyers increasing, 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 increasing. And keep in mind, my favorite play is when we break high a day inside of a supply zone, and you have traders buying a high a day break, market ordering in, providing liquidity to the long side for the short sellers inside of a supply imbalance where you have sellers present. We hit the supply zone, and then boom, look what happens. Sell volume starts coming in once, twice, and then look what happens right after it. Price levitates down, and then look at all this selling pressure coming in. You have to ask yourself, where is all this selling pressure coming down here? Now, there could be two reasons. There could be two ways. You could have all these longs that bought, longs here, longs here, longs here. Now, once price comes below them, now they're underwater. So what are they going to do? They're going to continue to sell, and the market is going to continue to sell off as long as there's new buying. Also, on this move down, you're going to have traders that are shorting the market and actually hitting the market and removing liquidity from the buy side because they are selling, which is going to fuel, again, more price down to the downside. And then one thing I want to note is that a lot of the time traders look at large volume bars and they think, oh, this move is going to continue down. Whenever I see a large abnormal amount of volume coming through at a level, especially after a crazy move up or down, that usually is going to be a sign of a reversal. So large volume bars to the up or downside usually is a reversal. So look at this volume bar right where my cursor's at. We have a huge red candle down. As it's populating, it's going to look a little differently. But as we close, 95% of this candle is sell pressure. Yet we cannot continue moving down on the next candle. That is your go-ahead sign that we might reverse. And in fact, we did reverse about 5 points to the upside because you had buyers stepping in down here passively from these aggressive sell orders, which were hitting the market and caused a huge sell pressure bar down here. So huge volume usually means reversals as long as there's absorption, as long as price cannot continue down in that trend where we have the volume from. Now we have the last example of the S&P 500, and I added the volume subgraph, the standard one. A lot of people ask me, how come my colors are different? If you go into your settings, you can use the appearance of the candle of the symbol ticks as your volume bars, so they aren't the standard blue. But that's irrelevant with this indicator. So one thing I want to mention is that we sold off pretty hard, and keep in mind we had a 30-minute demand zone where we have a buy order imbalance where there are present buyers once before at the origin of this move waiting for their unfilled orders to get filled once price comes down and retests the zone. So now you have traders, keep in mind, you have retail traders now, the market coming down, I'm going to sell the market, I'm going to short it, we're going to continue going lower, especially with all the current market news coming in, with elections and earnings and stuff like that. Market then sold off, and look at the volume bar. You have huge sell pressure. 30,000 lots traded, 30,000.6 lots traded. And then you only have, 400 lots to the green side, to the buy side, inside of a demand zone. So now you have traders shorting the market, selling the market, whatever the case may be, where there are buyers present inside of a demand zone, without even looking at volume alone, just looking at price. This looks like we're going to bounce because you have a lot of traders selling off into demand. And then look at the next candle. Another very strong volume bar, almost the same as the previous one. But now you have, 3/4 of the bar is buying pressure. So these sell orders that got absorbed inside of the demand zone, now the next candle, we have buyers stepping into the market. It's safe to say we have new buying coming in. And then boom, look at the next candle. A valid entry could be right here, stop below this low, stop below the demand zone, very tight. You're risking 4 to 6 points. And the potential reward is much higher, especially that we're bouncing out of a demand zone. So we rally. Next candle, very strong volume, came through in the market. Nothing really to note and important there. But we just have very strong buying. The point is if you see a lot of selling inside of demand and price cannot continue to go lower, it usually means we're going to reverse. And if you see volume coming in on the buy side or the green side on upticks inside of a supply zone, usually means we're going to reverse to the downside as you have a passive seller absorbing all those orders. So I hope you guys all enjoyed this video, and then you can see what happened the rest of the day. From that demand zone with the heavy green volume like that is where we bounced at, rallied about 40 to 50 points. So your risk was very, very low, rallied pretty hard, and this would have been good. A lot of people see late day liquidations, late day short coverings with huge volume. That is normal at end of day. It's nothing to be worried about. So if you see anything on end of day with high volume, does not mean we really have a seller, does not mean we have a buyer. It's just late day liquidations, and it's normal in the market. So I hope you all enjoyed this video. If you did, drop a like. Also subscribe to my channel. It would help me out a lot. Follow me on Instagram, and if you want this indicator, drop your email in the comment section below, and I will get to them, and I will send out mass emails as frequent as I can, pretty much every night. So thank you. I hope you enjoyed.